Hello, welcome to another video of ES Futures Trading. Today is Friday, June 30, it is 1 a.m. Eastern Time. What I'm going to do is I'm going to play a replay of yesterday's Thursday action. We did our homework. I guess I don't know if I made. No, I did not. I did not make this homework live. The previous day we got some references, some non-excess high. Some of the high was very questionable. Also, M period started. Was started right from halfback, previous period halfback, and the low was somewhat questionable. There was no change in the monthly. The weekly I started one time frame lower, and there is cessation of one time frame lower actually in the daily. Now I can see the monthly here, the weekly down here, and the daily in here. Now I'm still carrying the information from 6, 9, and 12. Multiple distributions from the previous day were closed yesterday, not the day before yesterday, and the mechanical buy coming from 4400. Very, very questionable this low here. This slider 4400, which is this one here. Now, what do we have today or yesterday? Was some very relevant things that were coming. We were having, jobless and GDP reports. And tomorrow, the most important, we have PCE that is not highlighted here. Again, at 8:30. And now today, the replay is going to start at 8:30 actually. Okay, these are my references. The week high, questionable high because it matches another high. The high at the 21st. This poor low has been repaired, and we have a last is not here, not sell. Let's check where is Cedo. Cedo was a 44.83. What? My bad. 44.17.50. Settles here. And last 44.22. Up here, settle. Last and settle. Okay. Let's replay. Remember, we do have overnight inventory. It's 31 already. Okay, this market is having a spike to the upside. This market is having a spike to the upside. Inventory is 100% long, and market is having a spike. Upside spike. There's a gap to the upside already. This high is not repaired unless it's traded in regular hours. It's not such a big reaction. I thought it was faster, but no. It's very slow, man. Very slow. Market is trying to go higher. I mean, this is 15 times. It's 15 times faster. Very, very. What does the BX now? Check what the BX is. 13, very low. I'm going to go to 30, okay? No spike. There's a little spike to the upside that is being rejected. No. Why is it rejected? Okay, you have higher here. Market tries to go to the side, creates a gap, it comes back inside the gap. No, inside previous day range. I'm standing to the opposite side of the overnight range. Quite the distance actually. No, but it's super slow, man. It's super slow here. I have this level as a market as a weak level in the lower side, and these ones as well. This area here. Notice how yesterday, before this day, notice how the market tried to come lower. But this is a 45-degree line here, what you have here. Every time the market went lower, it was pulled back. It was just pulled back to POC. This is extremely dangerous to be short here in this market. And the shorts are trapped. Shorts were selling or shorting in the hole here. Shorts are trapped here. The closest that there's a risk here, right? The thing is, if the shorts see an opportunity here, they will just close the position. If the market doesn't take the 4400 here, this is the key level here, 4400. Going to 10 again. 4400 is key here. If the market cannot take the 4400 and provide a relief to the shorts because the market was too short here. All the shorts are underwater now. Try to go short again being pulled back to previous day POC. Overnight inventory is rebalanced. Questionable high, very low. Mechanical high here. Very short. These shorts from the overnight. These was just selling here, but it didn't have the power. These ones. It wasn't that violent, going to the downside. Violent spike, burst to the downside, just grinding his way to the downside. What this break did is remove all the longs here. And get the market a little bit short from the overnight. Balance the short. It's actually quite slow here. I'm going to go to 30 times faster, very slow. This is the last, remember? It's curious who comes with this high volume level here. Oh, look at that. What the hell, what happened here? What do we have at, this is 10, what did we have at 10 a.m.? 10 a.m. No. Pending home sales. There's a liquidation, no? We were talking yesterday about how packed this week is with events that can bring volatility to this market. And GDP, monthly jobs. No. This job. This is actually the weekly IOS. So this is not the monthly. Next week, non-farm payroll is on Friday. That's the monthly. This is an inside day. Opening inside previous day range. Advertise. Job. Increase the closer to the center, the higher the odds of chop. Higher odds of having a rotational market as well. One time frame has ended here. So having this C taking B, give us an increase in the odds of market being rotational here. No market going high, going low, going high, going low. There's not a trend here. Remember from previous day, this is very low, multiple distributions here. But the market got too short here. Yesterday, the market just got too short here. Mechanical high here. Questionable, non-excess. Non-excess if we put this high together with the high that the market made in the 21st. This is a rotational market we're having here. 40 times faster. Notice where this C period is coming from. It's coming from 7. This is last. This is very questionable. The low is very questionable here. Now, but remember from yesterday, okay, shorts are trapped here. There are some odds. Okay, got a short in intraday and shorts are in risk of being squeezed here. There are still shorts that are still here. All the shorts from this area. Now this high has been taken. Now on the monitor for continuation. What I don't want is the market taking this high and coming back inside. That's not a sign of a strong market here. A strong market will come here, go higher, maybe test it once and then keep going higher. It's the second time the market has come back inside previous day range. It's not a sign of strong buying there. Buying was higher though. You can see buying, opening higher, higher volume, higher volume, higher volume, higher volume, higher volume here relative to the previous day. But volume becomes relevant when there is a clear direction in the market. There's no clear direction here. This is not a clear direction. The market has come as is because it's a rotational. They're also having a rotational market that high here. So there's a glitch here. What's happening? Is E that small? I guess I'm doing it too fast here. E came back inside. E is not this much. It came back kind of like around this area here. The data is just it's taking too much time to populate here. Notice how G high is right at overnight high. Pretty close to F high. Really close to E high. Okay, now we have a previous reference 2-day range high, which is, we're going to take this, it was this 2-day range here, this high here. That one is this here. Now notice how this is the second time the market, it's the third time market comes back inside range. Okay, it came back inside range. You have this rally has a mechanical base, very questionable base here, and it is the third time the market has come back inside previous day range. That's not good for that when the buying coming here. This is price advertising something, advertising, the market is not as strong as price advertise. It's advertising here. It has volume to back up. Notice how this period comes back exactly to half back here. One tick to half back. This low here is quite questionable. Market can come back and check this one. This low here. Unfortunately, it's not populating here. Gosh, shame. What's happening with this silver? I guess it's because I'm going too fast and I didn't close my charts in a while. Okay, you have E, F, G is up here and H is all the way down to here. One tick from is very good. Also, market's going to take this low because there's a change now. There's a change. The rotation has started. G has taken F low here. And my bad, H has taken G low. And H low is held back. Oh, okay, look at that. I comes back exactly to held back here as well. This is not a good. Oops, look at that, no? Oh, these buys are out now. Now, continuation, looking for continuation here. Most of the buys here have been removed. Come on, don't tell me you're buying from Settle again. Huh. Just look at this. All this buying again coming from the Settle. This level was weak. All these longs have been removed and now they're doing the same again. So this low is not a good low. Alright, this is J low. Alright, what I mean with that is J low. You can see here is coming couple ticks from Settle, basically the same area. This high is good, but I will carry this. I will put this one as a weak level. This one is not good, man. Last, notice how it comes from previous period half back. Which happens to be last as well. So this one and this ones are questionable. What I mean with questionable? In this case, what I'm seeing is very mechanical buying. Okay, very mechanical buying. It's not the kind of buying that can hold the market, that can hold a rally. Notice how H, okay, is settled and also have back here. This level here. It's also weak level. Now, what else? This level is history. This one is history as well. This one is history as well. We got a high here. We got a good high here. The low is also not bad. It's good. The intraday trading is conducted by very mechanical, very short. Weak traders here. Value is higher. Oh, also notice well this. Could this be true? Nice. Previous Bailey. No, it's too much. Too far back. I'm looking too far back here. Notice how this high. You're matching highs. 1, 2, 3 highs. The trend to the downside here ends with K. And this high is questionable. Good also this high is going to be taken. Can it be taken? I don't know. But they also favor this. But the longs are risky here as well, because the kind of day we have, volume is starting to decrease here. The higher it goes, it starts to decrease. In M, in L actually, it just matched previous day. It ended up lower. There's no volume here for a spike to the upside. The whole L period is being removed here. Okay, I got this high also. Now notice now what happened here. What we have POC here. POC is moving higher. Okay, POC is moving higher. Notice this thing. Right? I know, but the market closes at a high. Market is going higher. Comes back to POC. No, I thought it was a 45, but no, there's nothing here. There could be something here to the upside. It's becoming risky to the upside. Having in consideration these lows here, this one here, this half back here, and this low here, very close. All right, nothing else here. Now, to do my homework now, I'm going to remove this square. This has been repaired. This has been repaired. Red. This is 629. 629 high. 629 low. Which is not bad. This is questionable. This is questionable as well. This is settled. Now it's settled. There's a new settle. This is level has been repaired 44.20. Notice this high volume here. This time is this time is a 40.25. Okay, going higher. There's another one here from previous days. There's a 20 at 20 now. We have another one 25. Okay. This was a level. I don't remember that, but I remember this was when the market was going to the downside. Volume. I don't see any. Oh, there's one thing here. This area. Notice of this. Notice this 10 case here. It's only one level. Okay. Come on. What level is this? 21. There was some big volume here. The thing is, when I see this kind of volumes, the market tends to have either reject or say when the market there's some sharp movements once the market takes this level or defend this level. Okay? In this case, for example, the market took this level out. It wasn't sold from this level here. Oh, come on, okay. The market wasn't sold from this level here. Right? It didn't come up to here and so, but it took this area out. Okay, it took the area out. If this level is not taken, there's probably the odds to the downside are actually increases. In this case, wasn't the case. High volume here. This kind of volume is what I watch. Another higher volume here in this area. Notice what happened when this volume appears. When the market is going to the upside, if this appears when the market is going to the upside, it's running. In this case, it's going to the downside. Then it comes back up higher. You don't want to see this. You don't want to be long and see this happening. Okay, when you're going to the upside, you want to see this kind of volume here, like kind of momentum. This is kind of stopping. The risk or the odds are going higher are reduced, are decreases when I see this kind of activity. Same goes with this thing. We got something here. L was a battle here, but context, right? Notice the highs here, high, matching highs here. Good also this high was going to be taken. And we have volume the upper side here. And then it gives us when the market has this kind of events schedules, we have PCE tomorrow, FOMC next Wednesday, non-farm payrolls on Friday, we have GDP today. When the market is coming from this kind of movements, I remember tomorrow is end of the month as well. I mean, today is end of the month. It's the end of the week. There could be something here. Something could be some either could be a squeeze or liquidation. The last time the market has this kind of date, what they did is squeeze the short to the upside, And what happened? This was the end of the contract actually, end of the quarter, where he now end of the month we have inventory that's extremely long. Traders could keep looking to the upside. Just because that happened before, just because of that. Be aware of that fact. There could be some liquidation coming, but the market is in balance. Is in balance actually at this moment. Let's check the time frames here. Notice what happened here in the month. The month is tomorrow's end of the month. And if tomorrow's closes up here, good also market can keep going higher on July. And when we are starting the summer, summer are usually thin markets and is quite dominated by very short time frame traders. Now my homework. Let's do the homework now. Let's do the homework. Okay. Just stating the facts here. I'm going to move this, make it smaller, and grab my, okay. This is questionable. This is questionable as well. This is good. This is good. This is not good. Okay. One. This is the 4400. It is a weak low. Okay. But the market got too. The market got too short here. Shorts was shorting the whole here like 3-4 times. The market tried to come down here. And every time the market was pulled back to POC here. These shorts could be squeezed. They are still here. You got this low, this high has been repaired. We have a better high now. On the upper side we have the gap. Oops. Yeah. Overnight inventory. Inventory was 100% long. Was being rebalanced. Was being rebalanced at the opening. Opening inside the range. Advertise chop. Odds of rotational market are high. We have rotational market. Mechanical high was there. Shorts, very shorting. in the whole, the previous there were being squeezed. Alright. What the other markets? Let's see, or let's check how the markets overall are. Now we have here crude is in range. Oh, look at this. Oh, look at the bond market. The bond market has break this range. Huh. Look at this, man. Look at this. Remember, this is a range, okay? This is a range here. There's nothing here. This could be a look below, okay? Look below. What can happen here is we may have a look below and fail. Could that be? I don't know. Or this can have the upside continuation. My bad, downside continuation. This is looking below. The 30 years is still there. It's still in range here. This is in range. There was a look above here. There was a look above and fail. This rally here, or this range didn't made it to the high. It got too long. Seems this is getting too short. It's getting too short, but it's breaking to the downside. This market is getting too long here, and there's some long liquidation going on, but it remains to be seen if this low is going to be taken. Then, oh my God, look at the bond, at the gold. Big break, 1900s. Oh my God, it's another mechanical level here. Look at, there's nothing here in this market. There's nothing here. Nothing is holding this market. It could come back all the way down to this. The next reference in the lower side is this area here. This range here. Not the looks reference, but the next step, the net support could be for the gold market, could be this area. Or which is, this one is supported by this one as well. Okay. What do we have here? 1820, something like that. Then we can come back all the way down to the 1800s here. It's still kind of like a halfway to end of the quarter here. And the dollar is recovering, crude as well. Very interesting. This is becoming interesting here. Just in time before earnings and all that kind of shit. My bad, all that kind of stuff. Bond markets are breaking out of range to the downside. Dollar is recovering. Crude is in range. Gold is in liquidation mode. No lie. Volume. Let's check volume. Next thing was check volume, right? Let's check copy. Oops. Volume was high. during the session, but ended lower than yesterday. This tricky here. This kind of volume was increasing. This increase in volume, and today has started to decrease. What happened? What's happening? Oops. Volume is, the market is going higher, volume is picking up, and then comes to a certain level, and there's okay. The second guessing. I'm going to second guess myself, the market say, right? Traders start thinking. The next relevant pieces of information here. There's a very wide POC here from this day, and the gap here. We have a gap here. And this non-excess, I mean, this market high, it has excess, but kind of like matching the overnight. On the lower side, we have weak levels here. This is very questionable to me. This low here is very questionable. Okay, weak low, not just the 4400, but look how this is held back of this day, very narrow day to the upside. And still multiple distribution, 1, 2, 3 distributions here. In this day, you have to also multiple distribution, 1, 2, 3 distributions. The market closed the distribution and then just keep going higher. The emotional part is like move. But it doesn't happen. It didn't happen today. Because of the events that we have next week, FOMC and non-farm payroll, it's not unusual. It's not unusual to see. Oh no, I mean it's quite common actually that you will see before these events. You will see portfolios being hedged here, being hedged to the upside. We have these sharp rallies, and then just a sharp, followed by a sharp break just before the events. Just before the events. This is when hedging and rebalancing happens. When we have FOMC, we have non-farm payrolls next week. What else? What else do we have for next week? FOMC here, ISM, non-farm payrolls on Friday. And tomorrow is end on the month as well. What was happening here? The market was getting too short. There's these shorts in this market. In a movement, remember the original movement is to the upside. I think this is short covering here. Still, momentum is to the upside. There is some rebalancing here. Okay? But all the shorts that fuel this movement, they are not in the market anymore. We have new ones. We have new ones here. Okay? We have new shorts here in this area that are being removed. The shorts from this day, and this day, I say they are out. They could be out. Now the market just got too short. This could be the market may be forming another range here. The volatility that is coming could trigger some sharp rallies. Maybe this high could be taken, or some sharp breaks as well. Now, it would pay to be neutral, very neutral as possible. Just follow the market, follow. Be aware of market generating information. Try to be in sync with the market. Pay attention to context. What the context is for each movement the market is having. Let's keep going. Let's keep going. Just a second. All right. Let's let's keep going the homework. Let's keep doing the homework. All right. Oh, the histograms. I had to take a screenshot of my histograms to see what the histograms are. These are the histograms. No, I don't see too much. Oh, okay, let's see. The fields. What is this? Oh, this was from yesterday. Okay, it's very questionable. Very questionable. Okay, that is history. Ah, no, this is today. This is questionable actually. But I did have this area from this day. Okay, from this day. Notice how here this is short covering. Short covering weakens the market. If there's going to be something here, there's a lot of shorts here, or in this case a lot of longs. Come on, a lot of longs here. No? Come on. From this day, okay, from this day, the market breaks here, okay, and traps the shorts here. Trap the shorts in this movement. The market tries to go higher, and it just fails. This is a mini 45 degree. Every time the market goes higher, it ends up at this level here. And from this day, I had this area here as a reference, you know. Why not this one? Why not this one or this one? This one because it's closing high volume here, and the market tried to go higher. Remember this 3Y high here. Has that been taken? No, it doesn't mean it. This is very weak intraday level from the 20 or the 20th. Good odds the market is going to take this one. And what do we have above this? We have the gap. What do we have on the upper side? This volume has been taken. There is something here. Actually here, and this volume going to the downside, to the center, to the downside, and longs being trapped here. The bets are off if the market comes back. If the market comes back to this range, closes the gap, re-enter this range, we apply balance guidelines here. Come on, you know, in this area, because if the market closes the gap, re-enters this range, and I immediately will see the opposite side of this range. But if it is rejected, the market enters this range, closes the gap, re-enters this range, and is rejected, you can see the rejection. How do you see rejection? We had rejection yesterday. It was very clear. Not yesterday, before yesterday. When the market took this high here, let me see if I can get the market profile. Here, right? I'm going to, what the heck is this? Oh, this is the replay. Come on. Okay, this is the market profile. You know, let's move that one and take that one also. And this day, or the day before yesterday, the market repairs this non-excess high. No, this was weak and poor at the same time. Okay, it takes these highs out. There's a breakout here. It fails to take this high. And you can see rejection here. When the market has this, has this period, it opens. The next period opens at the low. What else can we expect there? It does. We want to know to differentiate, to recognize when the market is being rejected. When higher prices in this case are being rejected. It could be lower prices. And the same way how the higher prices are rejected, it happens in the lower side as well. And there was rejection here, rejection of higher price. And this is your trade here that you have your short here. And after that, you could see the market trying to get to 4,400, fails, and then the market got too short here. 45 lines being formed. Now, what the 45 lines is a way how the market gets wider, gets a wide POC, and is failing, in this case, it's a 45 to the downside. It fails to, it's just being pulled back. Each time the market tries to break, it's pulled back to POC. And that is a market where it is very risky, it's high. It's very risky to be short. Being short in this kind of market was extremely risky. Being short is the last thing you want to be in this market, okay? It doesn't mean I'm going to be long. It doesn't mean get long, okay? It means that being short is very risky, okay? Trades, these shorts can be removed, and then the market this day could break to the downside. Now remember, because before, the previous day, you have this very emotional day. This is short covering here. But this short covering is how, if you put these 2-3 days together, for example, I don't know if you can do that, you will see a P formation here. Can you see? What is this? This is the stem of the P, this is the P, but it is elongated. It's not truncated, okay? If this was truncated here, for example, it's having elongation to the upside. You have 1, 2, 3 days going to the upside. Okay. The P is being elongated to the upside. Okay. It's having upside continuation. It's quite risky, okay? Just be aware of the risk, and especially in this kind of events, there could be a sharp break here. This time in regular trading hours. Okay, now let's do. Now, what the market is doing here? You can see the market is going to the upside. 1, 2, 3 days going to the upside, right? And we can see a range being formed here. This is the low of the range, which is the breakout here, kind of like a question mark. This is the base of the spike base here. This is a weekly low. This is not relevant anymore because it has been taken. To range low to the range here, and this is the weekly high up here as well. Okay, you can see a range here in formation. All right, let's keep doing the homework. Oh, I was going to take a picture of the histograms, and there's supply here. And there's still these shorts here are being removed now. This is short cover here. Now the lower side, notice how do we have here? What do we have here? What do we have here? Let's put gray here. We have volume here in the lower side. Oh boy, look at this. Look at these histograms. Man, these are terrible ones. Remember this day here? Remember this day here? Crazy. Very emotional. This market is... this is terrible, man. These are the difference. I can see something here. Let me do something. There's a rally here, right, to the upside, right? The way how this market went to the upside is quite different to the way of how this market is going to the upside now. This is extremely weak. This is very short time frame trading going on here. This one was bigger time frames, kind of like a weekly, daily, weekly time frames. Traders doing this upside movement. You know what is happening here now? This is crazy. This is very short time frame. Notice this low here. We talk about also. Look at the kind of high volume, the lower side. This low is questionable. What is this? I don't know what is this, but oh, there was high volume here. This is a high volume market from this area here. Okay, if the market comes back to this area, I would be very, very careful in the market if the market takes this low out, because it could be a big break from this level. Okay, notice as well here. Notice where this high volume is located. In the lower side of the histogram, in the lower side of the bar, this isn't the upper side. There's nothing here below. Same, kind of like the same thing here, right? This is more important than this one. But, there is higher volume in the upper side. Here, you have high volume here, but this volume couldn't take this higher. Okay. I got these ones for tomorrow. This one. What else? I was carrying these ones as well from this previous day. This area, the same kind of thing that we have here in this area can happen here as well. But the market, the direction of the market is to the upside. This is good. These are going to be for the future, and I consider just to the night, just to the night. All right. There's this triple high, 4Y high here, 1, 2, 3, 4Y high, very weak high here as well. The sign who is doing the selling here. I can expect maybe until the next movement, it seems like there's going to be a lot of sideways movement here. We have a lot of events coming, and along the schedule, events that can bring volatility and can trigger some short covering, long liquidation, short coverings, long liquidation. We have seen something of that today. Again, I was going to take a screenshot. Still don't do that. All right. There's a lot of shit in this. A lot of stuff in this. In my charts here. I'm going to put these longs, this thing here, and over here as well. Tuesday, June 29. Tuesday, June 29. Now the homework itself. Do we have something that I always check is if there is some big volume blocks after the close. Oh no, look at this. It finally has coming back, huh? Look at this is what I'm looking for. This kind of volume here. This is interesting here. Let's make this one. What? I want you to go away. And you too. I don't need you now. Alright. This is what I mean. High volume blocks at very high. Somebody is holding this market. Okay, somebody has very good interest in holding this market high. Really high volume here. All right, this is very interesting here. This is coming back after a while. After a while here. This thing here. All right, so now this level becomes relevant. And where is the 10? This one as well. And this will be 40. Come on. This level will be 21, and this one 25. Okay. And there's something coming from the 20, which have this is, I don't know, this is why. Oh my god. Remember I had, there was some high volume on the 20 in the previous day, and now we have accumulation of volume and this around that level. This is very weak here. What the market can do, I would pay special attention to that. What the market can do is come back and check these ones out. Whatever here it is can come back here, maybe extend a little bit to the downside, and then boom, make a rally from that level because of this somebody's interested in not to let the market fall here. It's highly unusual here. All right. This is the lower side, and also we got up here. This is kind of questionable as well. I'm going to put this in my homework too. Okay. Same observation. I'm going to move that one over here as well. What I interpret, what's my interpretation of this? This is absorption. Okay, there's a rally here to the upside at the closing. Market closes way up here. On the last period of the day, not the regular trading hours, but the overnight actually, there is some absorption. It's a big volume here. How to move to the, okay. Big volume here. These are trades above 150. I will be interested in see how big these traders are. This trade, for example, let's take U-bars here, settings, and I have my threshold as, I guess, 150, and comparator, wait, 150. Let's put this 250. Wow, all these are above 250. Let's put it 500. No fucking way. This is big blocks here. Don't tell me it's going to be about 1,000. No way. No way, come away. And this is... Nah, it's not working. I don't think this is 2,000. No, I think no way. Oh, no way! Look, did you see that? This is a big block. These trades here, there's somebody who had bought at that level a huge, that's huge block there. That's above, this is one trade only. One trade about 2,500 contracts here. That's something, right? 200, 800, it will go to zero. No fucking way, man. God damn, this is one purchase here. 29, 23, 22. This is only one purchase. Okay, this is only one buy here. God damn it. There's only one buy here as well. You know. God damn. And there's a bunch of 50s here after that. There's one big contract and there's a bunch. The difference is could be 50s and one, whatever. But oh boy, that was something here. God damn it. This is going to be very interesting tomorrow. Tomorrow is going to be a very interesting day. Alright, this is going to be very useful. Tomorrow. Okay, let's take a bigger screenshot here. Alright, I got that. I'm going to put it in here so I can see better. And I can see better and what I want to see. I want to see this area here. I want to see this area here as well, especially this area here, which conveys this one and this one, these two volumes, these two areas here. There are two areas here, this one and this one. Big volume here and more volume at the closing. If there is some, I don't know, somebody's buying here, somebody's propping this market higher. If there is a break, you know, market goes higher because these people is buying, right? But they just stop buying, market can come back. There could be some pullback. The pullback come to this area, could be to this area here. Some buying should appear here, maybe after the market takes this low or this low, because it dries here as well. You know, you can see this dries here. It dries here. There's nothing there. If there is downside continuation here, it means that this was just gains being played here. There could be some serious liquidation if the market takes this one and keeps going to the downside. You know, kind of like planning my date for tomorrow. Once you start thinking or seeing those things, or you can do something about that at once it happens. Oh no, I didn't mean to do it here. I'm going to put it here. No, not here, but here. All right, got it here. And from yesterday as well, let's check something here. Is this, no, not this one. There's a lot of congestion yesterday. Very congested market, huh? Very congested market. There's a lot of congestion here. There's no conviction in this upside movement. Friday. Take a screenshot. I will take a screenshot of this thing. I'm going to move to here. Now, what do I have? Let me push so I can see this while I'm right. Okay, this is the monthly. The monthly. Okay, end of the month. End of the month. Closing. Oh. This is a coincide with the breakout has not been there was a test. I could say that there was a test here, you know, but the serious test will come next month. Will come next month, in July. It remains to see where I will be paying particular attention how this market closes here, right? Because we have a breakout in the monthly time frame. Now, the weekly, that's the most relevant thing from the monthly time frame. The weekly, you have 3 months, 3 week balance, 3 week balance, and almost, this is very rare here. And you can see how this body is, right? 3 week balance is the most relevant thing so far. It would be very. I will pay attention. I will pay special attention to the close of the weekly bar. Why? It could be because it can be outside bar to the upside. Why this is relevant? Because we had a 2 week range. There was a breakout from the inside bar, but the breakout fails. The breakout failed. There was a look below this range. It didn't never look below the 2-week range, and now this week, the coming week, can close above this inside bar. That would be a breakout. That would be a breakout failure, and and really good also the market keeps trading higher here. Now, what is the high of this range? The high of the inside bar, is 44.49. Let's put that in here, 45.49. 45, 45, 49. I cannot be seen here actually. Okay, this level here. What the level, man? Is this high here? It's Monday. This is the holiday, and this is high. Weekly inside bar high. This will be very, I think this is going to play a special role in what's coming. Weekly inside bar. This one here. How the market reacts to that high here. This one. This is an inside bar. This is the high. High. All right. This inside bar high is a 44.49. Yeah, market is right there. Okay. I don't like when I have this one, so I'd rather use it here. Okay, what else can I see here? The 3-week balance. 3-week balance potential. What happened? Yeah. Now the other thing here. What's always there is always something here. I'm going to make if I take a screenshot here of the weekly. I want to remove this thing. Once the market comes up here, you got to apply balance guidelines here again, because if the market comes back up here and falls back inside, it could happen the same thing like this one. Market could look above. Remember, this is a non-excess high as well. Can check this high, repair this high, and come. If it falls back inside this range, the destination is the opposite side of the range. It's not that far actually. It's only 50 points. For the break, it's not that much. But the direction of the market is to the upside here. In the weekly time frame, this is starting to look like short covering formation in the weekly time frame. Okay. It was here, and then it's having another one. daily. The daily, what do I have in the daily? It's one time frame higher. Market, the market is one time frame higher. What do this mean? The market that we have, it means that we have an upside, a market to the upside in the daily time frame. Market to the upside in daily time frame. Market to the upside in the monthly, and the weekly is about to confirm that as well. The only time frame that is not doing that is the weekly. All right. If the weekly closes above previous bar high, that would be all time frames in sync to the upside. All right. The high, this high is not bad. This high is not bad. Just have a little gap here, a very tiny gap here that I didn't actually put it in here. Market, let's see what the market does if it closes the gap. Can the market close? Now, market closing the gap with another gap, that's another thing. That's also. What else can I say here? This is starting, the daily time frame is starting to look like a short. It's starting to have a short covering shape, the short shape. It's starting to shape. The daily time frame is starting to look like a short covering formation, which I mean the P. Just as in the weekly. Just to be aware, not meaning too much, but be careful here. Now the intraday, we have this question below here. Now probably traders have forgot what happened here. Why I don't have? What is the market? What the heck? Is this high? Wasn't this high repair? Oh yeah, it was repair. It was my chart. Yeah. No. What? What's going on here? Oh, okay. There's 29 here, 29 here. God. Let me. What I'm going to do here. I guess I have too much data here. I'm going to save this chart, save my other chart as well. I'm going to close it. I'm going to close this one as well, so I can close my software. Save layout and exit. Don't save layout and exit. And so I can reopen. It will look better now. I guess I have too much data. That happens to me always when around Thursday or Friday. So usually I have to close my my software, my charting software, to a couple times in the week, just to refresh it, just to erase some data that is. It becomes too hard. Okay. This is going to be my histograms here. And this is going to be my market profile. Instrument use. Alright, right there. This level here is weak. It was last. And this is settled. It was settled. This I don't trust these levels here. Mechanical buying here. Previous settle. And this is previous last, this previous hardback. Previous settle, last low. Now notice how this buying also comes from. This is kind of too far back here, but this is previous settle. There was a settle here as a POC as well, and high. Mechanical here. That's, what do I call this? Double low. Not call it double low. Okay. This levels could be relevant tomorrow or today. This is accumulation high volume 45, weak low. This weak low here, because it's also hard back here. And the 4400. I don't think that this is very serious here, going to the upside. Okay. Now, from the overnight, the only thing that remains. Let's see if I can see it. No, I cannot see this now. I cannot see. There was one prominent overnight POC, which was this. And this looked like a low liquidation actually. It is here. It is here. I will take this. I will take a screenshot. Should I? I know it's there. No, I will take that. Let me take a picture just in case. Take a screenshot of this. Oops. What? I don't want you. I want you. I want you. I want you. I want you in the use mapping. Alright. Now why I'm interested here is this thing. This one is hard back here. This is 4400. This is huge volume here. Market going to the downside here 3-4 times, and these ones are being squeezed to the upside now. These trades are being squeezed to the upside. How long are going to be? I mean, if the market breaks here, tomorrow we have PCE. If this what can happen? They're very nervous now. This can go to the upside. They're going to be squeezed. This trade is coming out of the market. It will just triggers a selling here, because what we also have here is a gap. Okay, there's a gap here. There's a gap within this level. Between this level here, there's a gap here, and this level here. Oh, come on. I think this is too big. There's a gap here between this level and this level here. Oh, come on. I guess I'm going to just go to wrap. I'm going to write here. There is a gap here. Okay, and this height made in the overlay. Right? Very, 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 very mechanical. Going to the upside there. Now, the next thing I want to take a screen is I want to screenshot here. This is going to be in the way. So many. Oh, what was the volume of that overlay? There's 300, huh? But quite a bit here. This overlay has 300. Did it? No, 200. No. 1, 2, 3, 4. No, I was checking this one. No, this has nothing. There's nothing there. There's only like that is 90,000. Ah, that was a holiday. There's nothing there. There's nothing here. There's no volume here. Okay, there's no volume here. From this day, there's no volume here. If anything happens here, are going to be these shorts. These shorts here that are underwater now, they can be squeezed to the outside. We're forced to cover there. They are very nervous here. We have a very emotional market here, short covering here, and the squeeze still didn't happen. Can't happen here. If it doesn't happen, watch out. Then remember we were checking these levels here. There could be some buying around this area, around this area. Because we also have the 4400. If a market comes back to here, if it doesn't stop there, there's serious threat here that the market can actually close this day and target this low here, very mechanical low here. Now let's take a screenshot of this thing here. Oops. Alright, let's take a screenshot of this. Why I am interested in this level, in this. I am very interested in this. Okay, come on. This thing here, the gap, many things here. There's a gap here. Gap here. Non-access here this day, non-access here this day as well. Very questionable. Non-access. This is a very, this is, oh my god, look at this. 44, this is weak and poor at the same time. There was weak and poor here. Now this is weak and poor here at this low. Yeah. You cannot see as clear as here, right? Because this is a very emotional day and it has multiple distributions here on the lower side. What the market does with the gap is going to be very interesting to see. You got the gap here, the gap low here, gap high here. That's a gap. Market profile. Market profile. Market profile. Okay. Market's coming. The 2-day range high. This range, I don't think this is too relevant now, but we could stop in here. When the market, this was very important when the market has this high here. When the market re-entered this range, this 2-day range, okay, it traded to the opposite side of the range. It took the low out, but it did not have downside continuation. It comes back inside, and now we are back again at this high. Okay, the trade here is, or can be, you got outside balance of this range. Again, outside balance. What do we have upside? We have the gap, the gap close here. If the market doesn't, and this non-revisit prominent overnight POC, the market doesn't do any damage, or even does not repair these things, maybe closes the gap, but this doesn't have upside continuation, pay attention to what the market does regarding to this level as well. Market re-enter this level, the same trade can happen, this time to the opposite direction. Right? Again, this low, which in this case is being replaced, this 2-day range is being replaced now for a 3, 6, 8-day range. Now, a little bit wider, it can come all the way up to here, right? It can come all the way to here, just where these references are, right? One range, other range. Market profile. The market is one time claiming high. We all know this. Everybody knows the market is going. Mechanical base. Does it have a mechanical base? No. Today's high and low. Today's highs, high and low are okay. I would say are okay. Yesterday's low is very questionable. It is poor and weak at the same time. Also it comes below it. The market has no support. Value is moving higher. Value is actually higher. Yesterday the value is higher. This value is higher than previous day. It's clear that. And volume has picked up. But what is that's why I question the volume. I question today's volume. After a short covering rally, and the market this is very questionable. Now, what I'm seeing now is I'm questioning these lows, right? This lows very questionable, coming from 4,400. This one as well coming from previous day very area low. This day as well coming from from the high of these distributions here. And finally today we have a good day. But this, this recovery, this rally is a reaction to the break that we had before. There's also a break that did not have volume. The lower the market went, the lower the volume it has. Notice how volume was decreasing. This is abnormal. Okay? Yeah, I guess I have no. Notice how if we take this range high here, range low. Notice where we are at now. Okay, at this moment we are at the center of the range, at the center of the bearish range. Notice how. Notice how before key schedule news events the market is right at the center of how many days? 3, 6, 9, 12, 11 days. Oh, 11 day range. We have seen this also. We have seen this range in the weekly. Remember, this is the market. This is a perfect balance. Market imbalance. Markets imbalance. Markets imbalance. Markets imbalance. Imbalance are just looking for more information before its next directional move. Okay. What do we have? We have a PCE tomorrow. We have FOMC. We have non-farm payrolls. What is coming? Earnings. Okay. I don't know whether banks start reporting in earnings, but that will be the beginning of the earnings session as well. Okay. I guess that's the second month of the quarter. The quarter. Well, yeah, we are close. Well, maybe one or 2 more weeks before earnings session. Okay, remain neutral. Remain neutral as you can be. Be patient. Be patient. Be patient. Have patience. Have patience. Let it trade. Trade come to you. Risk measure. Let's measure risk. What is this? All right. I hope this helps for your trade. The overnight, it is almost 3 a.m. in the morning. How long was I here? Almost 2 hours. I hope it helps. The overnight, I will be back in the trading desk before PCE, before 8:30. The market could open with a gap here. There's clearly have seen the gap here. I still think there are some shorts here. These shorts remain here. All right. I wish you guys. I hope, as I said, I hope this homework helps, and I wish you a good trading day. I hope I can be tomorrow in front in front of the computer with another stream. I am not doing the streams live now because I started as a way to keep my focus in the market, but now he has getting in the way and doesn't allow me to trade properly. It's really you cannot do two things at the same time. You either do one. My business is not streaming. My business is trading. You have any questions? Please just let me know. As I say, I have a Twitter account. What's the name of that? The freaking thing is. Is E-mini SP100 or E-futures trading, whatever. Which one? God damn. I guess I have to start posting so you can see, or you have any questions, just use that. Oh, and this stream, this video is also updated in YouTube. Just post any questions there. So I will answer the question. There's not, as I say, my intention is not to have followers here. I'm very willing to help or to answer any question you may have. All right. See you guys. I wish you a good trading day today. Stay safe. Bye bye.